I had purchased two ETFs around December 21st as an experiment. Why an experiment? Well, because these ETFs don't have much history. I figured I would purchase a few shares of each ETF and see what would happen. If they can survive in this market, they might perform well in a bull market. But we don't know that. So I decided to be cautious and only purchase a few shares in my retirement portfolio. But on February 1st, I decided to purchase more shares in my dividend and riskier portfolio for early retirement. If you're new here, my name is John and this is Talk Finance, where we talk all things finance, but most recently about dividend investing. Let's start with a new one you've probably heard a lot about, but you probably haven't really invested in or even put much research into. And that is Meet Kevin's PP. That's right, his pricing power ETF. Ticker symbol PP. What is PP? It's an actively managed portfolio of 25 to 60 innovative US companies that have more pricing power relative to their peers. The fund may use targeted ETFs as a potential macro hedge against anticipated market risks. If you know Meet Kevin, you know that most likely means an actively traded fund with a large Tesla holding. But let's take a look at the holding. The largest weighted company in the ETF is Tesla, coming in at 25% of the overall value of the ETF. After that, coming in at 14% of the value of the ETF is a 2-year Treasury note ETF, which so far I am liking. I didn't buy the PP ETF to have similar holdings than most of the other ETFs out there. I bought it to hedge my stocks and purchase some value in areas I don't have holdings in my portfolio. I believe Tesla is undervalued at the moment, but I don't think it will have as explosive growth as it did before. For the most part, I believe they will always be a company that all other electric vehicle companies will be compared to, and that makes it important to own. Similar to Apple versus Android, it's not necessarily Apple versus Samsung, but Apple versus all other Android companies. I still think Tesla shares will go higher, and as a hedge, I want to own an ETF that is heavy on Tesla but has other holdings that have a more stable growth, or in this case, PP. And I have to agree with Kevin, a lot, if not all of these companies have PP. For example, Apple has long been considered a safe haven when it comes to investing, even in a market like this where most people rather hold cash than buy a company. Obviously, in 2023, we have been in a market that only knows the color green, and we have seen the benefits of that in most companies. Apple is up over 20% just this month. Other honorable mentions on this ETF are Nvidia Corporation, Enphase, and Taiwan Semiconductors. Other companies I believe have a really strong PP. The Meet Kevin Pricing Power ETF went live on November 29th. And has since hovered between $16.57 and its most recent high of $22.68 per share. So if you have owned this ETF since its inception, you would be in the green by 12%. I bought the first few shares a month ago, which means I am up 32% for the most part on this ETF. And although the price hasn't been stable and it doesn't just go up, I did buy more shares in my retire early portfolio yesterday, February 1st. And since then it has gone up another 3%. I will say, I think the expense ratio is high, sitting at 0.77%, with 17.33 million in net assets under management. While a very popular ETF such as VTI has an expense ratio of 0.03%. I will not be purchasing this ETF as heavily as I would other stocks and ETFs, but like I said before, I think it's a riskier play that could have a larger reward. These are all strong companies with a lot of pricing power and a way to own a lot of Tesla without as much risk for your long-term investments, thanks to diversification. Congratulations, Kevin, on the ETF. Before I continue into the next ETF, I would like to ask you to hit the like button. It helps out the channel and it would mean a lot to me. As a thank you, I brought you a cute picture of a dog wearing sunglasses. My next ETF is SOFI Select 500 ETF, which is composed of the 500 largest publicly traded US companies, and each stock contribution to the ETF is based on the company's growth rates. This ETF does have more history than Meet Kevin's PP ETF, as well as a 434 million net asset under management versus 17 million with the PP ETF. SOFI Select, ticker symbol SFI or SFY, has been around since April of 2019. So already substantially longer than PP, but relatively new in comparison to most household names such as VOO or VTI. The price appreciation recently has been pretty good, but so have many other stocks and ETFs this month. So let's take a look at its 1 year. As you can see, the 1 year return sits at a loss of 8%, but since its inception in 2019, it's still up 45%. Most recently this month, it's up 11%. Let's look at SFY's largest holdings. Coming in at portfolio weight of 5.42%, SFY largest holding is Apple. Right after that, at 3.89%, we have Microsoft, which is another holding I already own and have purchased heavily. Right after that, we have Tesla. And following Tesla, we see Amazon. I do see some Exxon and Chevron on here as well. The expense ratio seems pretty good, sitting at a gross expense ratio of 0.19% and net expense ratio of 0%. I believe for the price per share of these ETFs, it's worth owning some shares, since there can be some great upside potential. There are pretty new ETFs, so there is always a risk there, but they are growing, and this could be the early days like owning VTI when it was in the $40 and $50 mark. These ETFs will grow slowly, but if they are at these prices in the current market, I believe they could have some nice growth in a bull market. Keep in mind other ETFs did perform better than SFY. Can't say the same for PP since it's new. VTI held better, having less of a drop than SFY and a better recovery. Let me know in the comments down below if you own any of these ETFs or if you are considering buying them. What do you like about them? If you enjoyed the video, consider subscribing to the channel, and remember to give us a thumbs up by hitting the like button. See you in the next one.